Hello guys, welcome back into the channel. Please make sure that you are subscribed and hit the bell notification so that you are aware whenever we are dropping a video. And make sure that you share with the friends and also engage with us in the comments. So just please let us know some of the questions maybe that you might have or some of the suggestions that you would like to put forward to the channel. Without wasting any more time, let's jump straight into the question. On corporate governance, it says you're provided with a media article relating to Gardam Limited. All right, so let's go and read this article quickly. Well, let's see. Firstly, let's just maybe take it one step at a time and look at each paragraph separately. So it says the three board members implicated in this case each own 150,000 shares. Calculate the loss that Loma and the two directors each were able to avoid by selling their shares on 13 April 2023. So let's go to paragraph 4. It says here, in deciding on the fine, the FSCA noted that on 10 April 2023, Loma had sent the message on 13th of April 2023. The three board members, Loma and the two directors, sold their shares on the JSE at 105 per share. The subsequent rapid decline to 8 Rand per share on the market price of the shares occurred in the following 2 days. So in this case, we would say that each of them basically avoided losing the difference between 105 and 8 Rand, because that's how much. So they sold for 105, but had they sold 2 days later, they would have sold for 8 Rand. So the difference would be the amount of money that they would have saved. So we'd start by looking at on a per share basis. So let's take this out. I'm going to take this out. So per share, it would be 97 Rand per share that they have saved, because we'd say, well, 105 Rand minus 8 Rand. So that means that it's 100 per share. And then, sorry, it's 97 Rand per share. And then we would use the 97 Rand and multiply by 150,000 shares, because remember that with each of these directors, they each owned 150,000 shares, as the question says when it starts. So then each director would have basically avoided an amount of 14,550,000. So let me put it like that. So yeah, 14,550,000. This is the amount that would have been avoided by each director, because each director owned 150,000 shares. So if we wanted to get the total amount, you just multiply that 14.5 million by 3. Okay, then let's move to 4.2. So 4.2, what does 4.2 ask for? So 4.2 says that we need to refer to paragraph 3. And then it says, explain why the text message is so important to the investigators. So let's go to paragraph 3. The incriminating message from Loma read, you always ask for my opinion. It will take a long time for Gadam to get rid of all the bad news. Sell your shares immediately at the current price. Delete this message and don't tell anyone. So this message would be important, because the question is asking why this message is important for investigators. Well, it is important to investigators because it is proof. It is important for investigators because it is proof of insider trading, and it shows acknowledgement by Loma by instructing the other directors to delete the message. So that's the first part there, because it would be important for investigators because it is in evidence of that insider trading. And the fact that Loma sent that message instructing, it means that he acknowledges that there's some crime that he is aware that he is committing. Otherwise, he wouldn't have instructed the other directors to delete that message. And then it says, explain why you think this is a crime referred to as insider trading. Well, it is insider trading because it relates to directors who are insiders trading on information that is not available to the public and hence abusing their powers as directors to defraud investors and the public. Okay, so insider trading basically means that sometimes you can be an insider. It's not only when you're a director, you can be an employee. You can be an employee and have inside information. You can also be, for example, be in politics and have inside information because sometimes political events affect share prices. And so sometimes if you're a politician and you have inside information of what is about to come in politics and use that information to trade with it, then you may be liable for insider trading. All right, so that answers 4.2. Now let's look at 4.3. So 4.3 says that we need to explain how rapid the decline in the share price and the fraudulent financial statements are likely to affect the existing shareholders and its workers. Okay, so let's look at the answer sheet. So here we want to look at, well, we have the shareholders and then we have the workers. So a rapid decreasing share price for shareholders. So I'm going to start with the existing shareholders and how it affects them. So existing shareholders, they lose monetarily from their investment and will likely sell at a much lower price. And thereby incurring huge financial losses, right? Because as a shareholder, you own shares in this company, you bought them for whatever price that you bought them for, but when the share price significantly then reduces, you lose out on your investment. Now, existing employees. Now, when there's this magnitude of a decrease in share price, usually very bad news. So there's a lot of things that could happen to existing employees. They could lose their jobs to being due to retrenchment. Maybe we could say that they can miss out on their annual bonuses. Yeah, those are some of the most obvious things that could happen to existing employees in a situation like this. All right, and then the last question, it says, if you were a shareholder in Gardam Limited, what questions would you raise in at the GM? Explain 2 points. Okay, let's see. So we have point one and point two. Okay, so the first point that I would make if I'm the shareholder, well, firstly, we want to know because there's the directors that have done the insider trading, which which is bad for the company, and then also that have basically produced and a negative audit report, as it is a disclaimer. So in this case, then, what you want to know is that what I would want to know that before the directors were hired, were there any background checks? And why would we do this? So I just want to quick explanation. This will make sure that the people who appointed them are accountable if they overlooked certain things in the background check. Okay, so that's one of the things that I would state. The other thing is it possible for the company to recoup some of the losses from the said directors through a litigation process. So this is basically suing. So that's another question that maybe as a director you'd want to ask. Another question maybe would be, is it possible to rescue the company? So we want to know, like, can we be able to actually rescue the company from the losses that it has already sustained? Um, yeah, and then the other thing maybe would be the disciplinary action. What disciplinary action will be taken against the directors? So we basically want to know all of these key details, and there's many more questions maybe that could possibly be asked and relevant for this case, but it's just a matter of trying to make sure that you apply yourself. There is no one type of formula to this that you can do. It's just a matter of understanding the question that is in front of you and applying your mind to it. Anyways, that is the end of the June 2024 paper one. And until next time, cheers.